In this video, I want to talk about gold, what happened to gold with the breakdown on Friday, and we avoided this. There were some warning signs. I'll go over that in a minute. The first thing I want to say is if you are going to trade the metals, you've got to accept that they are one of the most heavily manipulated markets on the planet. The only market that's more extreme is the currencies, and you're fighting a battle with the bullion banks, and the rules and the laws just don't apply to them. So you can get all kinds of crazy, insane, non-logical things that happen in the metals market. And most analysts, or many analysts, I think, are still operating in the fantasy land that gold trades naturally, and so they get surprised by things like this. So let me go over to the miners and let's start there. So here was the first big warning sign, and I've mentioned this in many of my previous videos. The miners were being suppressed. Gold had already broken out to higher highs, and the miners were not following the mining ETFs. Now, some of the major miners, Newmont, Barrick, and those were breaking out, and they are the main components of the ETFs. So there's no logical reason for the ETFs not to follow the big miners that comprise the largest percentage of those ETFs. There's no logical reason for the ETFs not to follow. So that was a warning sign, and I told my subscribers weeks and weeks ago that the bullion banks, the short, and this all boils down to the banks have built such a gigantic short position in gold that they are going to lose billions of dollars unless they can keep gold suppressed and try and push it back down so they can get out of those shorts. So that position has gotten so huge that they can't really just keep adding more and more shorts to gold. There's some kind of a gold cartel. My theory anyway is that there's a group of hedge funds that are defending every time they attack gold, pushing it back up, which is causing those banks to just get in deeper and deeper on their shorts to the point where it's going to be really hard to exit those, and they're probably going to take a loss anyway. So instead of continuing to build larger and larger shorts, trying to bring down gold, which is being defended, they turn to shorting the miners and silver, attacking those two areas, trying to keep the sectors suppressed and under control. And so now this breakout here, this cup and handle, the breakout, it was not completely unrealistic that GDX would pause right here. If I was to widen this chart out, you'd see this is the top of the baby bull. So there's going to be some resistance here, and in a natural market, this just would went sideways. So I wasn't terribly concerned about this reversal, but I was concerned about this one. If you remember, gold was, I think it was either flat or just slightly down on this day. So there's no explanation for this thing right here, really. Maybe some margin selling coming off the stock market, but the one place you want to be, obviously, in a market crash is in bonds and gold. So this was a bit suspicious, and this is the point at which I told everyone, place a break-even stop. And our entry was right here when the metals broke out of this sideways handle part of this pattern, this consolidation they'd been in. We had a volatility coil forming here, and then the breakout. That was the clue that we were miners were ready to break out of the handle part of this pattern, and so that was our entry. This down day on a day when gold was not really down, big warning sign that potentially a major attack was coming. So that was the point at which I told everybody to place a break-even stop on their positions, which would either be here, or if they were a little more cautious and they bought on this follow-through day, then it could be right here. The next day, those triggers or those stops got triggered, and everyone, at least anyone who listened to me, would have stopped out at break-even. And then on Thursday, then we get this huge sell-off, and gold had done really nothing wrong. So this was the warning. Well, this is confirmation that a significant manipulation was going to occur in the gold market. They attacked the miners relentlessly on this day to soften the market up. And then, of course, on Friday, the miners, gold was down a little bit. Um, at the point Friday morning, gold wasn't even down enough to qualify for this kind of a sell-off in the miners, much less a gap down in this thing here. But anyway, these were the warning signs. These, if you accept and recognize that the metals are manipulated and you take precautions against this kind of stuff, it's just what you have to do if you're going to trade this sector, then you already knew that something suspicious was happening, and you were, either out right here on Wednesday or Thursday, or you got out just as soon as your stop got hit on Thursday. And so, this got us out of the market. Now, let me go to the dollar. So obviously, in a market crash, there's no scenario where gold gets hit like that, not naturally. And add in that the dollar is collapsing, and this is starting to look like an intermediate top. We'll have to see if this continues to fall further. If it can come down and break below this lower low, then I'd say the odds are very good. This is an intermediate top. And again, the only market that's more manipulated than gold is the currencies. There's no way that this is going to happen naturally. And the market wasn't even, the stock market wasn't even collapsing. And in reality, the dollar should be going the other way in a market collapse. It should not be going down. So I warned people that this was coming too. I said, even though this was an intermediate cycle that had left translated, I said the ECB and probably the Bank of Japan would attack and suppress their currencies, and we would probably get a reversal, which we did. And then, we get this violent move up here, which again is not going to ever occur naturally. And then the exact opposite, a complete collapse in the dollar during a time that the market's collapsing. So again, during times of turmoil, the dollar should get a bid and should rally. And we did not have any turmoil here. We've got severe turmoil here, and the dollar is crashing instead. So, just again, if you're going to trade these markets, you got to accept that they're manipulated by central banks, and they're not going to behave naturally. So, with the dollar doing this, there's no scenario. In the stock market, there's no scenario where gold does this, not naturally. But we were prepared. We saw the warning signs. And we put our break-even stops to protect our trades, and we got out, without losing any money, or possibly if you were a little late, maybe you lost a little bit, but not much. But and actually, let me go to the intraday chart. So this is what I'm talking about. The rules are you can't trade more than 3,000 contracts in the gold market, but you can see what's happening here. We're trading upwards of 20,000 contracts in 5 minutes. This is not natural behavior. Here you can see, down here you can see natural trading, and then all of a sudden you get this huge explosion of volume. This is the bullion banks trying to attack gold. They're attacking the miners. They've softened it up, and then they unleash a huge amount of shorts to try and take gold down, and they succeeded. So if you aren't prepared for this kind of stuff in the metals market, then you really shouldn't be trading the metals, because this is going to happen, and I don't foresee any change in Wall Street anytime soon. They've got free reign to make money however they can, and one of the ways they can do that is to manipulate the metals market. Now I need to see if there's been, as I said, probably a cartel of maybe a group of hedge funds that's been defending against these attacks. I want to see if they come back in early next week and they push gold back up and they erase this attack, that will be the bullion banks are going to be in big trouble if that happens. Um, but as of right now, we just, we use our stops. We anticipated that that might happen. We saw the warning signs, the suppression of the miners, suppression of silver. Those are the warning signs. And then sure enough, here comes the big attack. So we got out with no damage. And now we're going to just be patient and see if the bull cartel can erase this attack. And if they do, then we've got a lot more upside ahead of us. But I'm not going to try and pick a bottom right here, because right now the bullion banks are in control of this market, and they want to take this market down so they can unload some of that massive short position that they have built up. So if you're listening to analysts that are still living in a fairy tale land, they think that the metals are trading naturally, and you're losing money because these people are not anticipating these kind of attacks and warning you, then you need to be with the SMT. I am under no delusions that this is a free and natural market. I understand the bullion banks use this market as a cash cow, and they're allowed to do whatever it takes to make money. And so we take precautions against this kind of stuff when we trade metals. The profit potential in metals are huge, but you just have to be extra wary and always vigilant for signs of market interventions that occur from time to time to take the metals down. And this was clearly one, and we were prepared for it.